Okay, guys, welcome back. Let's get right into the stock charts. Lots of action this morning, so I want to point out exactly what I see happening and what's going to continue to happen. And we are getting that sell-off. Again, if you follow my channel, I talked about this a couple days ago, looking for certain signs, and I pointed it out in the charts well in advance, let everyone know that I was getting short, and I was basically pretty much fully short from the certain breakdown points. So we're going to cover those. Again, the market will grind higher for months and months and months and then wipe out those gains in just a matter of days. So that is, if you're trying to understand my trading style, oftentimes I start pointing out trades in advance, saying, okay, there's setups here. These look like they're good. But they can take a couple months to play out. And then in a matter of 2 to 3 days, they play out. So something to kind of note that's especially when shorting, that's how the market goes. It'll grind higher. Everybody loads to the long side. They get complacent thinking markets are, they can't go down. Every little pullback is bought. And at that moment in time, when everybody's loaded long, the market just drops out. And, that's how it works. So triple Qs. All right, so here's what we talked about. It previously was this bearish rising wedge right here on this daily chart, and we just continued within the wedge. We had one false breakdown right here, which was a bear trap, and then we've got this breakdown here. Now, this breakdown is obviously much more, it's a different breakdown, and I think it's very unlikely that we're going to recover this this pattern is basically starting to play out as expected to the downside. So we'll probably get away from this pattern and start looking at new patterns to form as we continue down. One thing to note, all right, if you look at the hourly here on triple Qs, we had some support right here. It's about 313.70, right in that area, 314, 313.70. A little bit of support there, and we fell right to that, undercut it just a little bit this morning, and then recovered that. So that makes sense that it held at this level of support, and we're kind of bouncing around here. You can see, though, on the hourly, they recovered it, started to move it up into this gap for a gap fill, and now it's kind of selling off a little bit again. So one thing that is, everybody's looking for this gap fill right now. There's two gaps, basically. One up here at 330 that kind of got this whole thing rolling. And then there's another gap that we just created this morning on the gap down in tech, triple Qs. So they made it look like they were going to gap fill. They got all the way up here to 319.93, almost 320. The gap is sitting at 322. And then it's already started to roll over again. The sellers are stepping back in. So at this point, it's a sell the rip market. That's how this works. When you get a big sell-off, and we broke the big pattern right here, this bearish rising wedge that's been building for, all the way since October, basically. It's been creating this bearish rising wedge. We broke the pattern. So think, at this moment, I'm looking for more downside. Any kind of rip higher, I think, is going to get sold into. That's a sell the rip market. And markets don't just completely go straight down every single day and they never have any bounces. No, they bounce, and that keeps the longs. These gaps, when you start bouncing, that keeps people in the trade that are long, that are trapped long. And that's what these two big gaps have trapped. Trap the longs, basically, unless they were following my channel. Then, so you get the bounces, and they fall. The markets follow the slope of hope, just like they rise on a wall of worry. That's kind of the saying. Well, they fall on a slope of hope. So they come down and then they bounce, and they keep people in, hoping, oh, I can get my money back. I hope I can get my money back. I'll just get out if I can get my money back and break even. This is looking scary. And so when you get those bounces, it keeps people in, or, dip buyers will buy the dip and hoping that, they're getting the low. And then we roll over some more. So as you start to roll over, the people that were hoping to get their money back and didn't get out when we got close to getting their money back, they start to sell, and that creates that next leg down. Qs, for me on this chart, I think 299.50. We'll just call it 300. I think that's where this sell-off is going to go, and we'll probably get a more sustainable reaction around that level. Maybe a bounce off there all the way back up to, who knows exactly where. We might actually fill the gap after bouncing off that level. So for now, I'm going to say 300 is the level that I'm kind of targeting. Could be a lot lower, obviously, because this market, to me, looks like maybe we topped, And why do I say that? Well, let's look at SPY, but let me just point out the Qs real quick. One thing to note on the Qs on the longer term chart, you got the daily chart. This is going back to 2009. So you have this nice clean upward price channel. Qs has never really has not broken this price channel down to the downside, except for it broke it here, but nothing sustained. The Fed stepped in and saved the market here, and the Fed stepped in and saved the market here. That's what both of these are, is the Fed recovering the market. So it wasn't a natural recovery. It was a manipulated recovery by the Fed. And now we're trading way up here to the upper end of that price channel. So we're offsides, basically. We're outside of the normal support channel, which obviously I just showed. So there is the possibility that this was kind of an overshoot, and we are going to pull back into this channel. And if we do that, we're probably heading to the bottom of the channel. We could even break it, but the bottom of the channel around 242 could be a possibility. For now, in the short term, 300, I think we're likely to get some sort of a reaction there. Why would we get it there? Well, look back here. You can see that was resistance there, and then it was support. So it's a viable level of support right now. SPY. So, one reason why maybe we just saw the top, and, I put out a video a couple weeks ago saying we're at the top. We went about 2% beyond that. Nothing much. And again, if I'm putting out a video saying I think we're at the top of the market and it goes a little, 2-3% above that, I mean, that's still the top, right? I mean, if it drops from here and goes into a bear market and I put out a video saying we're at the top and I was off by 2%, I think we're good enough on that one. Doesn't mean that's going to be, doesn't mean I'm going to be accurate there. But one reason why maybe we're at the top is coming back to my trend line. Here's your 2009 lows. We're looking at a weekly chart, and you can see we held support back in 2016, held support many times. See all those times we held support, broke support in 2018. The Fed came in, saved the market. We went right to resistance and got rejected into the COVID drop. Fed came in, saved the market. We went right to resistance and, overshot it just a little bit, but basically right there. And we're starting to get rejected. Now, it's got some more work to do. This is not, this could just be a pullback. It's too early to tell. So we'll watch the charts. But as of right now, more downside. It looks like we're going to get more downside. We're not seeing the same downside in the broader market, the S&P 500, as we are in tech. Tech is selling off a lot harder, and the broader market's not. But I do suspect we'll start to see that weakness creep into the broader market. Here's gold bullion, holding up pretty well. So yesterday we had a $25 up day. Today dipping a little bit, but in general you can see it's still kind of holding up, where to me really does look like we put in the lows for gold. It's kind of what it looks like. So here was the low, and this was the area I said was going to be a good area to buy and go long, gold miners, things like that. We had bullish divergence. See the momentum is moving higher, and this was a divergent low. So we then got the impulsive break higher, and today we're just kind of hanging out. It looks like we're, it's still constructive, basically, is what I'm trying to say. And I think it's probable that we just saw the lows in gold, and we're going to start to move higher. Now, a lot of people, I think, when they see gold, when they see the market selling off, they think gold and gold miners are going to sell off just like it did back here in the COVID drop. This was a liquidity event where the a lot of funds and stuff will hold gold and gold miners as hedges to other positions. And when they have to unwind or they get margin called on certain positions, they have to unwind or sell their gold for cash reserves in order to cover those margin calls. And so that could happen again. We're obviously not, that's possible. If we see that, I think that's a buying opportunity in gold and gold miners. But another way to look at it is we might not get that same initial thing, and we might actually see a flight to safety in gold. Bonds aren't proving to be a flight to safety yet, and we'll look at that here in a second. So gold could be one of the holdouts or one of the last areas where you'll see people go to safety, and we could see a bid in gold. It's just possible. As of right now, gold's chart looks bullish, looks constructive. Here's TLT, the long bond. So again, nothing bullish in this chart. I see negative momentum. See how we're just continuing to make lower lows in the RSI on the daily chart and also on the PPO. So negative momentum, which is kind of the opposite of gold. Gold has bullish momentum. The long bond has bearish momentum and bearish price action. So just down basically across the board. Now the long bond is coming into what looks to be like some kind of major support right here coming off. This is the trend line on the daily chart. So we are coming into that. If we break that, there could be some real problems as rates kind of spike out of control. So something to watch for. See if we hold support down around this 140 area. You would expect bonds to catch a flight to safety. They're not yet. So we'll see. So XLF is the one holdout that's still looking strong in the S&P 500. Well, oil looks relatively strong too, but I'm expecting oil to sell off. But the financials still look strong, and that's because the bonds are still selling off, so the rates are rising. It's a play, basically, that the banks are going to make more money based on the rate spread. However, if the markets really start to sell off, people aren't going to be taking loans out because the wealth effect and just the fear. So even if the bank could make a higher spread and make more money on a loan, they're not going to be making as many loans. So, I don't think the financials are going to hold up if the market continues to sell. So there might be an opportunity here to short. Looking at the chart, we have longer term support coming back to 2011 right here, and we're above that. So I wouldn't be really interested in shorting XLF until we see a break of this trend line. And so, yeah, that's what I'd be looking for. Now, if they turn down soon, then we will put in negative divergence there on the RSI and the PPO. If you start to see price turn down, and look for the RSI to turn down, that would be negative divergence, telling me that a trend change is likely, and then I'd wait for a break of this trend line to trigger any kind of short. That's what I would do personally. Okay, sorry, I had to pause real quick. So back on Apple. Apple actually broke down first. It was one of the first fangs to really start to break down, and we're just saying continuation of that breakdown. Apple's got some support. It actually gapped down this morning. The support was right there, about 125, and it gapped down this morning. So I think we're heading lower in Apple. Let's move on. We'll look at Microsoft. Okay, so Microsoft, this was the breakout that Microsoft did after earnings, and it broke up, kind of hung out. It's not really, wasn't moving higher, and now it's already breaking back down. Now, it hasn't fully broken back below the breakout point. So obviously, that if you see that, a break below 227.70, then this was a false breakout all right here. And that's very bearish. That's basically a bull trap. If you get that false breakdown. So look for that. I think that's probably going to show up, but we don't have it yet. So continue to look at that. Amazon, breaking down a little bit. Nothing's technically changed from Amazon. We still, negative divergence. I'm looking for a break in the neckline. All these things are bigger picture things. When these bigger it really is going to play into the cues and the overall market as a whole. Google's kind of breaking down, but it's still above this bearish rising wedge, so nothing's technically changed, yet on this one. The buyers could step in and bid it up, and we could see new all-time highs, things like that. So until you get a technical change, like a break of this trend line right here, then, it's still bullish in the short term. You can see TAN, little kickback rally today, but nothing technically has changed from what's actually happening. So on TAN, on your daily chart, you have this uptrend line. You have a breakdown, so that's a sell signal, completely, confirmed sell signal. And, today they gapped it down, and the buyers stepped in a little bit at support. Here's your support line. I marked it out. This was the first level of support, which is about 97.76. It gapped it down, but it instantly recovered. So again, that's support. We could bounce here, run up a little bit, but that doesn't change the bigger picture. And the bigger picture is we broke this trend line. We broke down any kind of little rally that we get, I think will be sold into, and we should see lower prices. So I'm looking at, maybe a bounce here, a little bit higher, but then ultimately heading down to about 78.33. That's our next level of support. We bounce off of that, and then if we break that, then we head down to 57. It's about 58, and that's how this works. You fall, you hit support, you bounce, you break, you keep going down, you bounce, you break, you keep going down, you bounce. So that's how it will continue to go. It looks like on this one. This was all forecasted with the negative divergence in advance, and I kept pointing it out on my channel and on videos before we even broke. I said, look, it looks like we're getting close. We've got negative divergences, so watch for that breakdown. We now have it, and so there it is. Etsy here, it's breaking down, gapping down today, and, still looking weak. No, there was a little bit of a bounce right there on the open, but that's being sold into. So again, it's just confirming that this market's a sell the rip. I think when you realize what kind of market you're in, it can help you with your trading and your positioning. And this to me looks like we're in sell the rip. We'll see how the day closes. Obviously, they could step back in and buy, but if we continue to see the sell the rip price action, then that's going to confirm that we're going to see lower prices. Etsy on the daily. My next level of support, below the lows of today is going to be down here at 166.55. And that, from where we're at now, would be a drop of another 16, almost 17%. So watching for that one. Peloton continuing to sell off today, down another 3%. So this one, from the lows today, from the entry that I talked about on the channel, all the way to the lows that we saw this morning, down 30%. All right, so that's a good size move to the downside. Again, I think there's more downside. I'm looking at the major level of support and the 200-day moving average. It's about $100. I think we're heading down there. Whether we bounce here and then sell off, I don't know, but I think we will see $100 on this thing in pretty short order. Qualcomm down again. So clearly downtrending. All right. It's obvious now. Now we are coming into this gap. There's this obvious gap right here at 130.20. And we're getting close. I don't know if we're going to gap fill. I think they're going to step in a little early. And maybe from there we see a bounce up to resistance, which is about 142. So watch for that. But 142 to me looks like resistance, and I think we'll probably continue to, maybe consolidate there for a few days and then continue to work our way lower. Okay, so NIO, we have a sell signal, confirming sell signal. Obviously, I've been short this one for a little while. I've talked about this, and I remain short. Haven't covered anything on this one. But NIO, you have this uptrend line here on the daily. This is the major support line that NIO's been kind of working with. And yesterday we broke and closed below it. Today, gap down, impulsive gap down, and still hanging out below it. A little bit of buying down here towards the bottom, but still much lower than yesterday, down 7.5%. So that's a sell signal. Obviously, I stepped in early because this one was looking weak. And you can see the negative divergence here on the RSI and the PPO. So big negative divergence showed up right here. This was all divergent high price action. I was looking for a break. I tried to front run it a little bit. So far that's working. And now we have a confirmed break of support. So NEO, to me, I think will be down at this 22.34 before long. And we break, probably get a bounce there. We break that. Again, probably heading down to this $9.42 to $8 area. The trade desk, haven't covered this one in a while just because it hasn't really been doing anything. But the trade desk, you see bearish rising wedge on the daily chart, negative divergence right here. So this was all divergent high price action. And we got to the upper end of a bearish pattern, which is a low probability area of continuation. Sure enough, impulsive sell down, and now we've broken down to the lower end. So I got short this thing. I don't remember exactly where I got short, but I've been short for a little while. I believe I got short on the kickback rally somewhere right in here. But anyways, you can see that it's clearly, now it's kind of drifting sideways, but basically we're hitting support here at 734. A break of that, we're going to likely gap fill at 664.26. Probably get a bounce there, but ultimately I think we're heading lower. And we'll just continue to watch this one. Riot's breaking down today, down 25%. I don't have a position in this one. I did point it out in one of my videos recently. Starting to get that impulsive break. This thing has a lot of room to run. So I think if it continues, which I believe it will, but breaking down today, then I think we're heading down to about 1825 as the first level of support. But from where we're at here, that's still a drop of about 62%. So that's what I think is going to happen in this one. And that's all I got, guys. I'm going to get the video out. Thank you. And if you're interested in learning about technical analysis, take my course. Link is in the description below. It's $99. It'll teach you how to spot trades, read the charts, how to have patience and wait for your trades to develop as long as the technicals still look good, and then how to manage risk. All the things I think that you need. Well, maybe not all the things, but many of the tools that you need and skills that you need in order to have profitable trades. So thank you, and I'll catch you guys on the next one.